Market structure. You know, market structure is one of the best ways you can actually understand how the market move. If you don't understand market structure, you won't be able to understand how this market moves. So I'm going to use a drawing first to explain market structure before I will explain it on the chart. Now, whenever you are trading, you expect to see the market goes this way. And before I even continue, let me give you the types of market structures that you're going to see. The first one, we have the uptrend. That's for the first one. Number one, we have uptrend. Number two, we have the downtrend. Number three, we have the ranging or consolidation. So guys, so this is the three market structure we have. Now with the help of a diagram, let me draw them out. So this is the diagram here. As you can see, let's start from this first one here. This first one is called a bullish structure, or you can call it what? An uptrend. As you can see, the market is going up, coming down, going up, coming down, going up, coming down, going up again. So that's what makes it what? A bullish structure. And how can you identify this? How can you identify this? You notice that anytime the market is going up, the previous high which the market created here must be taken out by the candles, which we call a break of structure. Which we call a break of structure, or you can call it BOS. Anytime the market is breaking structure to the upside, it's called a what? A break of structure, and it's also called what? A bullish what? Structure. As you can see, the market is taking them out one after the other, and it's going up. It's going up. This is a bullish structure. Now for a bearish structure or a downtrend, the market must be taken out on the downside of the market, like the old highs, the old lows, sorry, will be taken out, causing another break of structure to the downside. I seen it as simple as this, causing lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, and lower low, which is what? A downside. Now this is very simple. When you look at it, you understand that this first one, this particular first one here, is going up, while this particular one is coming down. So there is nothing difficult to talk about here. It's very simple. For the last one is when the market is just ranging in one position without breaking a structure to the upside. Sometimes maybe after one particular break of structure like this here, after this one, the next ones, they now started ranging in one position. Look at, there is no break of structure like this ones here, either to the upside or to the downside. Everything is ranging in this one particular what? Position. So this kind of market is what called what a bearish structure. So this first one we call it bullish, or you can call it what uptrend. So this second one we call it bearish, sorry, bearish, or you could call it what down trend. So that is it, guys. That is it. So this, the major structure we have here is on this bullish and bearish structure. This is one of the major structure we have here. Now let's go for an example on a chart so that I'll be able to show you the examples on the chart. Now we are on a good chart here. We are on a good chart. On a good chart. Currently, gold is on an uptrend now. As you can see, the market is creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and what? We're expecting another what? Higher high. Causing break of structure to the what? Upside. If you can see, you can see it. The break of structure is what? Going to the what? Upside. As simple as this. So identifying market structure is very simple. Now what are we expecting again? Another what? Higher high. And let me tell you how you can confirm that a market is actually going up. See, look at this point here. This point here. Let me show you. This high here was being taken out with candles. I seen it with strong candles. I don't know if you have seen it. It was being taken out with strong candles. Same with this one. It was taken out with this particular what? Green candle. Now this one here have not been taken out yet. So we expect this market to what? Take it out. So that is it. Now for a downtrend, let's look for example of a downtrend. Let's look for a clear example of a downtrend. Let's look for a clear example of a downtrend. I'm looking for good ones. All these ones are uptrend. Higher high, higher low, higher high, higher low, higher high, higher low, higher high. These ones are uptrend. I'm looking for a good example of a downtrend. You know, gold has been going up for a longer time, so it's hard to spot a downtrend from here. But let me just use this particular range and explain. If we should consider this as a downtrend now, we want to be seeing what? A break of structure to the what? Downside. I see it. A break of structure to the what? Downside. We expect another what? Break of structure to the what? Downside. Causing what we call lower low, lower high, lower low, lower high, and lower low. So that is it. That is very simple. Now gold have been very bullish for a long time here. That is why it is going up. And if you notice, we're on a 4-hour time frame. You notice that all the markets here, it have been breaking the previous structures. It broke this one, came back again, broke this one, came back again, broke this one. So gold have been very much bullish. So if it is to be a downtrend, this is how it will look like. A downtrend, look at how it's going to look like. I think it will creating what? Lower lows, lower highs, lower lows, and lower highs. So do not what? Forget. It's very simple as this. So guys, well, I want to ask you something. If you are watching to this extent, please, I ask you to please subscribe to this channel and follow me for more content like this in the future. So guys, that is it. Very simple. I hope you understood it. Okay, let's talk about the last one here. This very one here. Now this one is a kind of structure that you should avoid. Now in this case the market is not what going anywhere. The market is not going up, neither is it going down. The market is just on a particular range. Let's look, for example, here should have been a perfect example of a ranging market. As you can see, yes, though we have some other mini structures like breakout structure to the downside, but if we should consider an overall structure here, gold ranged here for a longer time before what breaking breaking out of this particular box. This box ranged for a long time before what it broke out. Now there are some other things on structures that I will not talk about in this class now. In this very video, I will talk about it in other videos, which is we have micro structures, we have the higher time frame structures and lower time frame structures, so that you're able to understand the difference between those two, so that you not get confused. But overall, looking at gold on the 4-hour time frame, even on the daily time frame, you're going to notice that gold is very much what bullish. So that is it. Look at it. So here should have been a ranging market. If you notice, it ranged here for a couple of days, see, up to over 2 weeks plus before it broke out, clearing its high and it's going to the upside. So guys, that is it for market structure. Hope you understood a little thing on this class. Please do well to subscribe to this channel, and once again I want to recommend a broker for you. If you want to have a broker, or you want a broker that is going to give you capital to trade from, I have a broker under my description. Gold funded. You can what click on the link to get an account for yourself. It's actually a very cheap and affordable broker that always pay out. No hidden rules, very clear and what straightforward. So guys, thanks for watching. God bless you.